Our first guest on this pod would be Riyad Abou Jaoudeh. His career started at Kareem. Now he's a partner at MEVP, investing in different startups in the MENA region. He has a lot of insights to give us about the markets, how he's investing in startups, and what trends we could see. Welcome, Riyad.
Thank you, Ahmed. Just a correction: my career started in Booz & Co. And after the MBA, it started at Kareem. Actually, during the MBA, it started at Kareem.
Okay. Yeah. Hey, quick question: how did you get to Kareem? Like, if you could give us, how did you get to Kareem? And then, just in 2-3 minutes, how did you launch your career in investing and in startups? Just who is Riyad in 2 to 3 minutes? Who is Riyad?
Yeah, thanks. So basically, I was doing an MBA at Wharton in entrepreneurship, and I was always, in startups, wanted to launch my own company. And, part of the program, we have to do an internship, right? And I wanted to do it in a startup. And at the time, through my brother, who knew the founders of Kareem, Magnus and Mudassir, he connected me with them because I was looking for a startup in the MENA region. And I spoke to them. I spoke with Mudassir, and at the time I didn't know what he was building, but he explained to me the vision, and he was very bold at the time. In 2013, he said they want to build the best company in the MENA region, and I thought, wow, this is very ambitious. And I joined them for a summer to do the internship. I was responsible for Qatar. From the first discussion to the time I joined, my role changed 3 times. Startups. Nothing is stable in startups, and it was pre-funding for Kareem, so pre their major funds. So it was only angels at the time, and there were about 20 people at Kareem, mostly operations. So I was in the very, very, very early days, and then went back to my MBA, finished it, and returned to Strategy End at the time. Booz got acquired by PwC, and they rebranded to Strategy End, and I was sponsored by them, so I finished a year and a half, and then joined MEVP. I joined MEVP because I met one of the partners of MEVP, who was a Wharton alum as well, through the events at the alumni events of Wharton, and we always discussed startups in the region and companies. So at some point they had launched a new fund and they wanted to grow. So he asked me, he said, you're very interested in startups. Why don't you either launch a startup or join a VC, and this is how it happened. Yeah.
Following up on that, you mentioned you moved into being a venture capitalist, kind of giving money to startups. Could you describe what is the job of a venture capitalist? How does he find startups? How does he get in touch with founders? Where does he look? Do you need to have a following so you could get to as many founders as you can, or like how does it go? What's a venture capitalist? What's your day-to-day job?
Yeah, I think venture capitalist, as a definition, in my opinion, is a believer in a vision of a startup. It varies by stage, but we believe that a company is building something important and valuable, and we invest to make that vision happen, right? So we invest and help the company grow their team, grow their product, grow their customers, etc. So our job is not to give people money, but to invest, right? And help them build the vision. We don't get involved in the business. We support them. We tell them what they need to hear sometimes if there's tough situations. And we guide them to grow. We help them to network connections, open up new markets for them, new investors, new customers, and then reinvest in them until they are at a certain size. We try to find an exit, so whether an IPO or an acquisition, etc. And the way we find startups is, first we build a strong brand for ourselves, so startups come to us. But we also actively engage. We actively use LinkedIn, Twitter to find new entrepreneurs. We go to events. We participate in entrepreneurship, ecosystem events like university stuff, accelerator incubators, other mentoring, just to meet entrepreneurs in the early stage, keep a relationship, and then invest when they need to invest. Yeah.
Love to hear that. You mentioned that when you invest in a startup, you're helping them network, helping them, giving them advice. When you're sitting with a founder for the first time, is there kind of you promising them something before you invest in them? You're telling them, okay, we're going to provide you these services, or does it come along the way? We see a lot of VC firms, they're like, okay, we'll help you do the marketing, we'll help you do the hiring. What kind of firm is MEVP? Like, what do you promise the founders? Do you promise the founder anything, or no, it's just, we're going to give you advice along that sort?
Look, there isn't a explicit promise. There's an implicit promise that will be by their side. We support them. We'll tell them, the hard truth and the hard facts when they need to hear that. We'll push them. We'll help them recruit. We'll introduce candidates to them. We'll help push their narrative in the market, push their vision, sell it to other investors. We'll help them with customers. We'll help them with technology, etc. However, it's all pulled. We are pulled in by the founders to support them. We don't come in and run the show at all.
Love that. You mentioned you're at MEVP. Could you tell me more? What are the funds you have at MEVP? What are categories of startups you invest in? How does your portfolio look like?
Yeah. So at MEVP, we're a VC managing multiple funds. We're at any point in time actively investing from one fund. So right now we're investing from fund number 3, which is called Middle East Venture Fund 3. Before that, we had 2 funds. The first one was a $10 million fund. Second one was a $32 million fund. And this current fund, Fund 3, is the $90 million fund. We invest in technology startups, Series A+, so not very early stage. Fund 2 and Fund 1 were earlier stage funds, but Fund 3 is not an early stage fund. So each fund has an investment strategy, and that investment strategy includes stage, so early stage, seed stage, or Series A+, growth stage, etc., and has a geographic focus and has investment themes. And investment themes typically include sectors and subsectors. And this is more dynamic and fluid because, over the investment period of the fund, which is 3 years, things change. So, however, when we launch the fund, we have a theme, we have investment themes, and then we adapt them over time.
Yeah. You mentioned you had seed stage kind of fund, and now you're going to growth funds. What's the difference between each fund in terms of how you invest in startup? What are your categories in choosing these startups you want to invest in?
Yeah, so the themes don't change. However, the stage and changes, right? So in the early stage, we invest, we don't invest pre-product at MEVP. We invest post-product, but potentially pre-traction or very early traction. So we see little evidence. The company has a product and they have a target segment, but they don't necessarily have reached product market fit. And product market fit means when I know what my product is, I know what the problem I'm solving is, and I know who my target market is, and I know they work because I'm getting traction and customers are paying for it. So product market fit is when I know the problem, I have the solution, and I have the right price and the right segment, and the customer is paying for my price, right? For my service, right? For growth stage for us is after product market fit. So the company cannot iterate in the product, cannot change their segment, cannot change their target market, etc. They know that after a few iterations that they know that this is what they are solving, this is their product, this is their target segment. Now they need money to expand into new geographies, into expanding their sales team, into growing their marketing spend, etc. And this is the core difference. So right now, we come in with companies who have somehow demonstrated product market fit, meaning there is traction and evidence that shows that customers are buying the product, they like it, etc. It doesn't have to be revenues, but it has to show that there is traction and customers like the product and are using it more and more.
Love that. Based on what you said at the beginning, you said you want to help companies either that get acquired or get listed. And we've seen a couple of companies in the region. Kareem got acquired by Uber. We saw Anghami getting listed. And we're seeing a couple of other startups getting either acquired or listed. What are what's the difference between both? And when you're speaking to a founder, what is a checklist you give a founder? This is what you need to get acquired, and this is what you need to get listed.
Look, there is the difference is very big. Being acquired is selling yourself to another company. Most likely, it's a private company, but it could be a public company. The transaction, not a lot of details are are released to the public. Not a lot changes from a day-to-day operation, other than the owners changing and you have to integrate, etc. Listing is a different game because you have to become accountable to your shareholders. Anyone can buy a share of your company, so there are some regulations you have to abide by. There's more transparency, more accountability. There's more, in my opinion, getting listed is much more difficult than getting acquired. Getting acquired is more inbound effort, and you becoming attracted to someone, and they are targeting you. Of course, you can market yourself to get, to sell yourself. However, it's better when you are approached to get acquired. For listing, you have to engage bankers and other advisors to support you. It's more complex, takes more time, has more risk. It might not provide liquidity to the shareholders immediately. There are lockups involved and other considerations when selling your shares. However, with acquisitions, typically the investors sell their shares, so it's easier for the investors to exit and create a return.
So as an investor, what's your preference? Would you push your company to go towards getting listed more or getting acquired, or you don't have a preference in the outcome?
There's no preference. I think it varies on a case by case with the startup, so yeah.
Going from there, your fund 3, I've heard you speak before that you started kind of investing in crypto or Web3. What does it look for Web3 in the future in the region? Where are we at? Are we at the beginning stage, growing more? How's Web3 looking in the MENA region?
Very, very, very early days. So I'm not seeing a lot. There's unfortunately a lot of fluff and pseudo scams, etc. So we are careful. Our nature at MEVP, we like to build new themes and to be on top of the trends. However, this is so nascent globally and in the MENA region that it's not our DNA to come in so early, pre-product, etc. We've done one investment in Web3 and one in a blockchain, in a crypto exchange. So this is what we've done so far.
Could you talk more about these 2 investments?
Yeah, so the first one was Rain. It's the Coinbase of the MENA region, the first properly regulated exchange. Now there are many, of course, but this was the first one. They allow people to buy and sell crypto currencies, and they are regulated by the Central Bank of Bahrain. We invested, led the Series A, then Coinbase, Paradigm Ventures, and Klein Perkins led the Series B. The second investment is Nifty Craft, which is NFT forge for the gaming industry. So on Nifty Craft, the vision, it's pre-launch. The vision is to basically allow creators to create their own NFTs for games, like, for example, items, tools, characters, dresses, etc., and sell them cross games. So it will be like a way for creators to build and sell across games. The reason we came in so early is because we knew the founder. We had invested in him before, and we know we trust him, so we invested early. We believe in the vision, but we did a small amount, so we'll see how this progresses, and potentially we'll double down.
You said something interesting here, that you knew the founder, you invested in him. When you're looking at a startup, or do you really just focus on the product, or do you look at the founder, how excited he is, the team around him? What makes or breaks your decision to invest? Is it the product alone, or is it the founders and the team around the founder?
No, it's definitely a combination. So it's the team, and it's the founder and his team and her team. It's the product, what they are building. It's the target size. It's the traction so far. It's the competitive dynamic, and the business model. So we look at everything. Now, if it's pre-launch, pre-product, etc., which is not what we usually do, it's definitely the team, right, and the vision. If it's anything after that, we look at traction, and we look at the team they have assembled, who have they hired, etc.
And a question on that: we've seen a lot of startups here in the US and maybe in the MENA region that people got invested in, and then they ended up not having a product. How do you do your due diligence when you're sitting in a founder? What are, for like people who are investing, what are due diligence items you advise to look into before deciding to invest or not in a startup?
Yeah, we have a checklist that we go over. We prepare a commercial due diligence where we go over the founders, the business, the product, the market, the unit economics, the go-to-market strategy, the business model, the traction, etc. And we build an investment memo, which is approved by the investment committee. After that, we do a financial due diligence and a technology due diligence. These are done by external parties. They look at the technology and the finance. And we do also a legal due diligence where we go over, but these are short due diligence. The biggest one is the commercial one. We go over the company's corporation, who owns what, where's the IP registered, etc. And then we do like a list of changes to fix. Most of the time the startups, they're early. The house is not really in order. Employees don't have the right contracts. The IP is sitting sometimes in the founder's name, things like that. But these are all very easily fixed.
Okay. A question I'd have to go more on that is, to move on. What are you seeing trends that are happening in the MENA region in the coming 5 to 10 years? Where do you think startups is going? What kind of startups are you seeing? What teams of startups do you want founders to go and build in?
I think it varies by country. Okay. So Egypt is different than Saudi Arabia, and Saudi Arabia is different than Jordan or Pakistan. See certain themes. So Web3 is a theme very relevant to Turkey, Lebanon, Pakistan, and now Egypt, with all the devaluations happening and currency problems, etc. We're seeing, transition, access in technology as access for banking services, for financial services, for transportation in Egypt, in Pakistan, etc. In Saudi, we're looking at a transformation of certain industries from offline to online. So looking at, for example, banking becoming more digitized, seeing commerce and retail moving more online, seeing pharmacy and others. So basically, after digitization of commerce, of retail and content, everything else is moving online. We're also seeing embedded finance becoming a new trend growing in the region, and many more. Like, there's a lot going on. In my view, entrepreneurs keep finding ways to remove middlemen, increase productivity, which is what technology does.
You speak about fintech and currency valuations in Lebanon and Egypt. Why do you think it's too hard for people in different countries in the region to adapt fintech, to go credit card, online payments, and are still I want to pay in cash. I don't want to go online. Where do you see the trend going, and why is it still holding back?
I don't think it's a user preference. It's access, right? Not a lot of people have enough ways to pay online, right? So it's access. If more people had ways to pay, and I think this is a trend that is happening everywhere. It's not going to stop. But it's not only about paying online. It's about access to a mortgage, or access to a loan, or salary advance. All the little problems that every person has to deal with on a daily basis, or buying insurance. Being digitized, right? Going to a doctor, becoming easier, faster, getting your medicine, etc.
You spoke earlier about you're investing in Egypt, Lebanon, KSA, Bahrain, UAE. I know each country in there has different regulations, has different allowance for you to invest. How are you? And the reason I'm mentioning that, I tried building a crowdfunding platform, and I hit a wall building that platform because of the different regulations in the region. How are you guys at MEVP or investors managing these different regulations and dealing with these different regulations?
So as investors, we don't have any issues. We're regulated as a fund in Dubai and in other countries. We're regulated when it comes to fundraising, etc. But we're not regulated when it comes to investing. with the regulation comes in different sectors. So if you're building a financial services company, you're regulated if you want to take deposits, you're regulated if you want to give lending, and it varies by region. The regulation is problematic because fintechs in the region have to get regulated by every country they operate in, so it creates a problem. But it's also a way to deter competition, to basically safeguard consumer protection and consumer rights, etc. So regulation is necessary, and startups have to know if the sector they're operating in is regulated, what are the regulations, and how to navigate those.
Taking a step back, you were part of Kareem. As being part of a startup, what are the vibes, or what is the culture that told you that this company is going to be successful, that they're going to reach their goal? Like, what is, just like we say, the PayPal mafia, it's like a real mafia?
Hard. Yeah, it's very hard, Ahmed, to know. Honestly, you have to be a believer. When I was in Kareem, at the time, I was, this was 10 years ago, 9 years ago, it was hard for me to see that this is going to be successful. And for the founders, they were very determined. So the determination, not seeing any setback or any problem as a setback, just seeing through the problem, fixing them, just another day, another problem, and going, solving for that issue. And I think the Kareem founders did a fantastic job with that. I was there in the beginning, and I used to think, how do these founders believe that they can break the taxi mafia or the taxi monopoly, the regulation, all the problems? But they did it, and they were incredible in the execution. They were incredible in believing. They were incredible in selling the vision to investors, to employees, etc. So you have to be very determined. And I think when I look at founders, I look for people who have a strong vision, have a strong belief in their vision, strong will to achieve what they are about to achieve, and take setbacks as just a bump in the road, and a normal part of the startup life.
And just like you said, startups it's up and downs. Sometimes you're like, oh, I figured it out, and a second later you're like, what's happening? I can't figure it out anymore. I'm getting to my last two questions. Looking at your portfolio, what is a company? I mean, so before looking at your portfolio, you invested in different startups in the region, different sectors. Is there a startup you sat with the founder and you weren't convinced by their pitch, but after a year or two, you're like, I missed it. I should have invested.
Yeah, absolutely. We cannot invest in all the winners, and we are going to invest in some companies that will not make it. And I have personally, passed on some investments that did very well, and it's hard to accept. However, it happens, and it's part of our job. We have to find and support companies to grow, and sometimes we fail, and sometimes we miss companies, and sometimes we just are unable to make that happen.
Would you be able to give an example of a startup you missed, or
startup I missed? Personally, look, I'd rather not focus on that. Let us focus on maybe companies that look. I've seen over 7 years in the industry. I've seen hundreds of startups. Just don't want to focus on a couple that missed.
No worries, I totally understand. One last question. Is there a startup that's super early, or a founder that's super early that's building another startup now that you'll be like, this is a winner, this is who I'll focus on?
Sorry, Ahmed,
this is who everyone should go and look at.
A few seconds. Can you repeat the question?
Okay. Yes, and so my question was, is there a founder or a startup now in the region that you like, this is where everyone should be focusing? This is a winner. They're just starting. Look at the startup.
No, there are many. There isn't just one. There are many companies being built. I see really determined, strong people across the board. Yesterday I was with the founder from Morocco. We're seeing a few interesting things in Turkey, Egypt, Lebanon, Saudi, Pakistan. It's really exciting, and definitely UAE. It's exciting what we are seeing. I'd like to see more entrepreneurs coming from certain parts of the world, like Jordan, Palestine, Qatar, Bahrain, Oman. However, I'm sure there are many good companies in those.
Riyad, and we're coming to the end of my questions. Thank you so much for being honest, answering, helping us understand venture capitalist investing in the region, and helping founders understand what is an investor looking for in a startup. Where can people find you? Where can people reach out to you if a founder wants you to invest in their startup? Where can they reach out to you?
So I have an open profile on LinkedIn. Anybody can DM me. I also, I'm reachable on Twitter. My email is just my first name dot last name at MEVP. So yeah, feel free to reach out on me on LinkedIn or Twitter, and I'm always. You and I met on Twitter, so yeah, would love to connect. Just don't harass me on WhatsApp. I get a lot of those follow-ups on WhatsApp, etc. It's hard to differentiate personal from business on WhatsApp, so I prefer to be reached on LinkedIn and Twitter.
And I could vouch for that. I don't know Riyad before. I reached out to him on Twitter, and just give him a week or two because he's busy. But he'll answer. He'll
absolutely.
Get back to you.
I don't check my Twitter every day, but yeah.
No worries. Thank you so much, Riyad.
Thank you, Ahmad. This was fun.
Thank you.